Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh and Priyanka Uppal. And over the next 1 hour, we take you through news and updates from within the country as well as across the globe, tell you which stocks you should be keeping on your radar and tell you what the brokerages are saying as well. But first things first, we've got to take a look at the US markets and the kind of handover that we have coming in from there, because quite a winning session there, right?
Absolutely, it was a winning session in US. But before that, of course, wishing all our viewers a very happy Dhanteras. Of course, this is an auspicious occasion of Dhanteras. Wishing all our viewers, their loved ones, an abundance of prosperity, good health and endless joy. Yes, now coming on to US market, of course, the macro conditions, they look little favorable if you talk about, the oil has cooled off. Resilient economy in US, that what led to a winning session on Wall Street yesterday. All three major indices for, in fact, blue chip Dow, that broke a 5-day losing streak. Tech-heavy Nasdaq, that notched its 8th positive session of the last 9, and so it was a good day for all the three indices. And if you look at the economic front also, Shreyansi, a lot of economic data that has to come in now in this week, especially the jobs opening data, labor turnover data, that is all due in the morning today. So we will react on it tomorrow for Indian markets. The first of several reports that is coming in this week, and of course this will provide insights to the strength of the, how the job markets are doing. If you talk about the individual stocks, the kind of move we saw on Ford Motors, that slid 6%. This was after they reported numbers and the guidance they gave, because the company gave guidance on the lower end of the range, what they previously guided, and hence the traders sharply reacted to it. Of course, the oil prices, the way it has cooled off, that has actually triggered a fresh positive sentiment globally in the markets. Now, traders will eye earnings report from major companies due on Tuesday today. This is a earning heavy week from mega caps stocks, especially the Magnificent Seven, and we have several other companies like Pfizer, McDonald's. They will post numbers today before the bell, and of course followed by Alphabet.
Well, absolutely, Priyanka, and a very happy Dhanteras to you as well. But after that, let's also take a look at what the crude market really did, because when you take a look at US crude oil, that sold off more than 6% for its worst day in more than 2 years after Iranian energy facilities were not damaged during Israeli strikes over the weekend as well. US WTI, when you take a look at it, dropped just over 6% actually to close around those $67 per barrel levels for its biggest daily loss since July 12, 2022 as well, and the benchmark had shed 7.9%. So those are the kind of moves that you're staring at, and futures for global crude benchmark Brent as well slid 6% to settle around that $71 per barrel mark. Now, Israel, of course, on Saturday attacked Iran's military installations in 3 provinces in response to Tehran launching ballistic missiles against Israel on October 1st. That is something that was an important update coming in as far as the oil market is concerned. And for weeks, of course, the market had braced itself for an Israeli retaliation following that direct Iranian offensive against the Jewish state earlier this month as well. Broader Middle East tensions are also simmering, and that is something that has continued to rise after the attack on Israel by Iran-backed Hamas on October 7th of last year. In oil markets, key consideration, of course, had been a direct engagement between both the parties, with concerns of an attack on Iranian oil facilities rising in recent weeks as well. That's something that we're looking at, and Iran, of course, accounts for up to 4% of global supplies, and that's the word coming in from the US EIA. So that's the kind of backdrop that you have coming in for oil as well. When you take a look at what else is happening for the oil markets are also staring at a global oversupply. So that largely is the kind of backdrop that we're looking at least as far as oil is concerned. And that largely is the kind of handover that we have. As far as oil is concerned, when you take a look at gold, though, you're looking at a slight easing coming for gold prices, because treasury yields are the ones that are rising at this point, and there's a host of US data that Priyanka talked about that is in focus as well that we're keeping an eye on. But that said, Priyanka, what else are we watching out for in terms of global cues?
Absolutely, Shreyansi, on front of economic data, jobs opening data, if you remember, that actually is a sign of resilience in the US market, and this data has to be closely watched out for. And other than that, consumer confidence data that has to come in from US. Now, talking about other cues, Japan, therein unemployment data has to come in. Other than that, of course, it's an earnings heavy week, so focus would be on the earnings. Alphabet, HSBC, Santander, Pfizer, Visa, Novartis, AMD. These all companies have to report numbers in US. And back home in India, you talk about Nifty, we have 3 of the Nifty companies which has has to report number. Cipla, Maruti Suzuki, Adani Ports, rather Adani Enterprise. 4 of the nifty earnings that has to report numbers. Now, other than that, if you look at the corporate action, there are a couple of stocks which will be watched out for. They are eligible for dividend. Gabriel India as well as Mascount. These 2 stocks could be in action on the news flow. And of course, PM is unveiling a healthcare project in Chhattisgarh that will also be closely watched out for.
Well, absolutely, and not just stocks back home, because we do have lots of stock-specific action this morning. Let's kickstart the show by looking at that. Then Ford Motor has guided to the lower end of its previously announced 2024 earnings forecast as it slightly topped Street's third quarter expectations. Then the Detroit automaker also said that it now expects adjusted earnings before interest and taxes, or EBIT, of about $10 billion. Now, it had previously guided to between $10 billion to $12 billion as well. Remember, Street had already been fretting over the fact that Ford would have to lower guidance on account of softening demand as well as rising inventory. So that is something that we're looking at coming in terms of the worries really coming to fruition at this point. Shares of the automaker were roughly down by 5% during after hours trading. So that's the kind of action that we saw, at least as far as Ford Motor is concerned.
Yes, absolutely. And that's visible, that the slowdown in auto space is not just an Indian sphere, but now what the kind of guidance Ford is giving. Of course, this gives us a caution sign. But then let's keep it with auto space only. What seems to be a deeper than expected overhaul. Volkswagen plans to shut at least 3 of the factories in Germany, lay off tens of thousands of staff, and even shrink its remaining plants in Europe's biggest economy. The car maker has been negotiating for weeks with unions over its plans to overhaul its business and lower the cost, including considering plant closure in Germany for the first time.
Alright, then moving on, shifting focus to the money markets then, where yen has now languished to a 3-month low as the loss of a parliamentary majority for Japan's ruling coalition in weekend elections raised uncertainty about the nation's political as well as monetary outlook. The currency weakened as much as 0.8% against the dollar as well, with the slide coming after 4 straight weekly declines.
All right, and now the race to the White House heating up with both candidates visiting key swing states while campaigning there. But polls suggest that even though Harris is leading in nationwide favorability, Trump still has a lead over her in the swing states. We spoke to Swaminathan Iyer, who's a consulting editor of ET Now, on how this US election is going to be a neck-to-neck race for Trump and Kamala Harris, and what will be the implication of the US election result on India. Listen in to this special conversation.
There is a lot of resilience in this particular setup. I don't care who is elected. I think Mr. Trump will be potentially disastrous in a few things. But on the other hand, any US president finds his hands tied by Congress. What will really happen? I mean, if you really want to look for the worst case scenario, it is that Mr. Trump wins and the Republicans win both the houses of Congress. If that happens, then, a lot of fairly extreme and somewhat scary things can happen. But that is not what is predicted right now. May I add that, all the opinion polls that you're seeing, they are within the statistical margin of error. If the margin of error is plus minus 3% and the lead is 1% here or there, it means absolutely nothing. So, everybody looks forward to a new poll every few hours now, it would appear, in the run-up. But as of now, all we can say is that it's a very tight race. In the United States, let us see what happens. I have no doubt that if Mr. Trump wins, he will attempt to put a large number of very heavy tariffs. The extent to which he will succeed will depend on congressional support for that. But whatever happens, I think that the mood both of the Democrats and of Trump is protectionist. So either way, it's not a very good outcome as far as India is concerned. I think we are going to find that a number of tariff walls will come up against us. In the past, we have retaliated, which then in some sense complicates the thing even further. Meanwhile, because of the question of the carbon content and decarbonization, the European Union is going to put very heavy levies on various things. So as I said, there are murky things ahead on the trade front. And India will have to be prepared to face a number of quite serious hurdles which are going to come up in the case of Mr. Trump winning. But even if Harris wins, I think I would expect some protectionism.
All right, then the mood is protectionist, and that's the word coming in, be it Democrats or Republicans that take the throne. But that is the word coming in from Swaminathan Iyer. And with that, let's take a very quick break. When we come back, we'll take a look at how exactly the Asian markets are shaping up. So don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates then. And since we're talking about Diwali, let's talk about the real sparkler then. And that has largely been gold, because let's place the spotlight back on precious metals. Take a look at what really happened over the last few months. Then both gold and silver have risen on account of safe haven demand. That is something that we've seen happening when it comes to this particular pack. But is this rally at this point sustainable? What are brokerages then saying about gold and silver? Ashesha is standing by with the answer to all of those questions. Ashesha?
Well, yes, what a move we have seen in precious metals over the last 1 year. Gold has risen a whopping 39% from last somewhat to this, and silver has also risen nearly 45% over the corresponding period. Strong buying by central banks globally, dovish stance that is adopted by central banks, and the fact that geopolitical tensions continue to escalate are some of the reasons why gold prices continue to surge in the global market. Back home, a strong buying and strong demand amid upcoming wedding season, and the fact that equity markets continue to remain very volatile and investors are now resorting to safer options is why gold prices continue to surge in the domestic market as well. Now, despite the run-up that we have seen over the last 1 year, brokerage houses and experts continue to remain very bullish. First up, we have UBS. They continue to prefer gold in their global strategy, and they think that despite the rally that we have seen, gold could touch $2,900 by the third quarter of 2025. Motilal Oswal meanwhile believes that gold could touch 81,000 rupees per 10 grams in the medium term. And as far as silver is concerned, it could touch nearly 1,25,000 per kg over the medium term. Kotak Securities, meanwhile, is also very bullish. They have given a target of 90,000 rupees per 10 gram over the by next summer. And as far as silver is concerned, they are eyeing levels of nearly 1,30,000 to 1,40,000 rupees per kg by next Samvat. So all in all, we have seen a bull run over the last 1 year, 39,000 uptick as far as gold prices are concerned, but brokerages even after the recent run up continue to remain very bullish.
Still remain very bullish. Of course, this year was just for precious metal, with 40% of return in silver, and you talk about gold, nearly 32% YTD. Thanks very much, Ashesha. Let's go on to equity markets now. Let's get you some earnings. Bharti Airtel reported its number, and an inline set of numbers coming in from telecom major. Let's go across to Somit for the breakup for the same. Somit.
Well, if you look at the second quarter numbers for Bharti Airtel, they're pretty much in line with what the street was estimating when it comes to the consolidated set of numbers. Revenue and EBITDA were high by around 8 to 11%. Margins came in at around 52.7%. But the net profit number, that was 14% lower on a sequential basis. But that is because of an exceptional loss of close to 854 crore rupees, which was on account of some Africa Forex adjustment, which led the net profit lower on a sequential basis. Now, if you look at the India mobile business, which is the key business for Bharti Airtel, there the revenues were up around 10%, EBITDA increased by 13%, subscriber base came in at close to 35.16 crore, a decline over the previous quarter, while the ARPU number was 10% higher on a sequential basis at 233 rupees. Now, this growth in the India mobile business was on the back of a tariff hike that we had seen, and this ARPU number of 233 for Bharti Airtel is now at a premium of nearly 20% when it comes to Reliance Jio. Apart from that, the home broadband business reported pretty much steady set of numbers on the back of strong subscriber addition. Enterprise business segment numbers are pretty much in line, while the DTH business segment numbers were quite muted on a sequential basis, and also when you compare with the analyst estimates. Now, if you look at the customer churn, that was also minimal for Bharti Airtel, and this churn was on the back of the tariff hike that we had seen in the second quarter. Now, the 4G and postpaid customer addition remained stable at around 2 to 3 odd %, while data consumption on Bharti Airtel's network continued to rise. Now, its consolidated net debt was marginally higher on a sequential basis, but the most important important announcement that came in from Bharti Airtel was a succession planning announcement, and they have said that Gopal Vittal will be elevated to the vice chairman role and will look at greater telecom responsibilities, while his position as CEO in Bharti Airtel will be taken over by Shashwat Sharma, who is currently the COO of the company, and this change will happen since Jan 2026. Now, Shashwat Sharma has been part of Bharti Airtel since 2018 and currently is the Chief Operating Officer and will be elevated to CEO by Jan 2026. Now, if you compare Bharti Airtel numbers with Jio numbers, Airtel has outperformed Jio largely on all fronts. Its revenue, EBITDA and ARPU growth were much higher than what Reliance Jio has reported, and the subscriber decline for Bharti Airtel was also on the much lower side. If you look at Bharti Airtel subscriber decline, it was just 0.8% on a sequential basis, while that of Jio was around 2.2%. However, the data traffic on Jio's network grew much faster at around 7.8%, while that on Airtel's network grew at just 2.8%.
Alright, thanks Amit for that update coming in. So that's what the fine print really looks like when it comes to Bharti Airtel. Let's also take a look at Sun Pharma, because that's the one that posted a healthy set of numbers for the third quarter as well. Both profit and margin came in higher than analyst expectations. The pharma major in fact also saw solid growth in the US sales as well. In fact, Srishti is joining in with all of those details about the earnings fine print then. Srishti, tell us a little more about what this healthy set looks like. What really stands out to you when it comes to Sun Pharma's numbers?
Well, yes, the pharma major has come out with a very good set of earnings, I would say, and that's the surprise coming in from their US sales as well as their specialty sales, which definitely has outperformed the street expectation. On to the numbers, that's clearly reflecting, because the revenue has seen a jump of 9% on a YY basis, but the profit has seen a good jump of 28% on a YY basis, exceeding the expectation, and 3,040 crores is what we have got on that particular front. Even the EBITDA margins have surprised. There's a more than 350 basis points of improvement, and 29.6% is what the company has reported. So just the revenue was in line, and apart from that, all the other numbers have done pretty well for Sun Pharma, and that's a positive read-through for all the pharma companies, because for the domestic formulation business, where indeed Sun Pharma is a leader, there we get to see that there is a steady performance of 11% growth on a YOY basis. When it comes to the US sales, then our expectation was close to $480 million, while the company posted $517 million, and even the global specialty sales has seen a jump of 19% on a YY basis. The emerging markets is also seen to be holding strong, and it's the R&D investment that has cooled off a bit, and 6% is what the company has posted on the R&D front as a percentage of their overall sales. So all in all, good set of earnings coming in from Sun Pharma, and that's indeed a positive read-through for the rest of the pharma majors.
Thanks very much. Good set of number coming in from Sun Pharma. Thanks very much, Srishti, on that review. Now, the government released its monthly economic review, which has turned out to be a mixed bag of opportunities as well as threats. Let's go across to my colleague Prakash Priyadarshi, who's standing by with more details on that. Prakash.
Yes, the Finance Ministry has come out with the monthly economic report for the month of September, where it has clearly mentioned that during this period, rural demand has strengthened and there is a growth in rural agricultural activities as well. However, there is a seasonality effect on some vegetable prices. We have seen sharp surge in vegetable prices during this period due to erratic monsoon. But overall, inflation appears well contained. Core inflation remain within the comfortable zone. However, sufficient food grain buffer stock and optimism for healthy harvest are likely to reduce food inflation going forward. Along with that, when it comes to external sector, as per the report, external sector continues to perform well, as reflected in rising capital inflows and forex reserves. But a risk to growth arise from escalating geopolitical conflicts across the world, and elevated valuation in financial markets in some advanced economies may pose a risk going forward, and there is a possibility of spillover effect on India as well. But overall, sentiments towards India among international investors is positive.
Alright, thanks Prakash for that update coming in. Moving on then, sources suggest that the central government is all set to begin the much delayed decadal census exercise then. In fact, that and the work to update the National Population Register or NPR are likely to begin early 2025 is what the timeline looks like for all of these. Now, the data will be declared by 2026, though meanwhile the census exercise may also lead to the delimitation exercise as well. We have Sumit Chaturvedi who filed this report earlier. Take a look.
Well, after a delay of around 4 years, government is going to conduct a census of population early next year. The results will be out in 2026. Well, generally it happens every 10 years, but in 2021 it couldn't happen because of COVID. Now the new date is next year, 2025, when the census will be done. It's an important exercise which is undertaken after a gap of around 10 years. Now, this will change the cycle of all censuses. So next will happen in 2035, then 2045, and then here on, those will be conducted. Well, it has become a political issue since Congress and other opposition parties have been demanding a caste-based census of the country. However, it's not clear this time the government census will be caste-based or not. A number of questions will be prepared, which will be more than 30, and around many questions will be asked based on demography, based on the people who are living, what they eat, what they do, all that. It's important for the development of the country as well. But as we see, always political color is given. This time also, it's quite likely that the political color will be given to the census going to start next year.
All right, thanks very much, Sumit, for all those details. Moving on, quick commerce, the instant delivery, that has taken over our day-to-day lives. And now big conglomerates are following the trend of the early entrants. Riding on the wave of this bus is the latest entrant in the quick commerce space is Tata Group's Neo Flash. Aishwarya is here with more details on this report. Listen in.
Well, quick commerce has indeed taken over our lives. As far as our day-to-day is concerned, it's heavily dependent on quick commerce and instant delivery. And riding on this wave are a whole lot of conglomerates apart from the early entrants such as Blinkit, Swiggy Instamart, as well as Zepto, which are the top 3 players and make for 85% of this market currently. Now, a report suggests that Tata Group is also set to enter the quick delivery space with their own new Flash, which is going to be their quick delivery service. Now, as far as New Flash is concerned, it will of course be a huge contender to all of these legacy brands, as well as JioMart, as well as Flipkart Minutes also, which are the latest entrants in this space. And now there's New Flash. As far as New Flash is concerned, it will house groceries, electronics, fashion, and a whole lot of other categories, and will be rolled out slowly, gradually going forward as well. Now, the Tata house of brands such as Big Basket, Chroma and Tata Click already have their presence and will be delivering through New Flash. Their products through New Flash is what this report suggests. And also, New Flash will compete, of course, with the likes of legacy brands or early entrants such as Blinkit, Zepto, as well as Swiggy Instamart, and also now the latest entrants such as JioMart and Flipkart Minutes is something that we'll keep a watch out for going forward.
All right, thanks Aishwarya for all of those details. So looks like the race in terms of quick commerce and the competition in terms of quick commerce then is intensifying at this point. But time for a very quick breather on the show. When we come back, we'll tell you the list of stocks that you should be keeping on your radar bright and early this morning. So don't go anywhere.
Welcome back. You're watching Market Cafe on ET now. Now time to take a check on the stocks that could be buzzing on trade. Ria is here with all the details. Ria, I'm sure a lot of earning, a lot of work for you in the morning.
Yes, good morning. So let's take a look at the stocks and news today. And as you said, a lot of earnings have come out. So first up, we have Ajanta Pharma reporting their Q2 FY25 numbers. Now the revenue has gone up around 15.5% on a year-on-year basis. Good growth on the net profit front as well, around 11.2% up on a year-on-year basis. Even the EBITDA has seen a good growth of around 7.5% on a year-on-year basis. On the margin front though, there has been a downgrade of around 204 basis points on a year-on-year basis. We also have JSW Infra reporting a very good set of numbers, up around 18% on a year-on-year basis. The net profit has seen a very big jump of 46% over the previous year. If you look at the EBITDA, that has gone up around 22% on a year-on-year basis, coming in at 607 207 crores in this quarter. If you look at the margins, that has seen an expansion of around 180 basis points, coming in at 60.6% in this quarter. We also have Skipper reporting a very good set of numbers. The revenue has gone up more than 44% over the previous year. Even the net profit and the EBITDA has seen a very good growth. Net profit up around 67% and EBITDA up more than 85%. The margins have also seen a very big expansion of 275 basis points. We also have Kalpataru Projects reporting quite a strong set of earnings. The revenue has gone up around 9% and the net profit has gone up more than 40% on a year-on-year basis. If you look at the EBITDA margins, that have gone up around 71% on a 71 basis points on a year-on-year basis, and the board has also approved fundraising of up to rupees 1,000 crores via a QIP. So definitely keeping an eye out on Kalpataru on the back of that. Let's also talk about Macrotech developers. Now, Lodha Group's Abhishek Lodha has donated a substantial shareholding in the company to the Lodha Philanthropy Foundation, which is now going to own around 20% stake in the company. And with this, LPF will become a major shareholder in Macrotech developers, and the foundation's rupees 20,000 crore corpus is going to be donated to national and social causes. Lastly, we're also keeping an eye out on Aegis Logistics, since the board of directors of Aegis Vopak Terminals, which is a material subsidiary of the company, has approved an IPO for rupees 4,000 crores. So definitely keeping an eye out on all of these stocks today.
Alright then, Riya, thanks for that update coming in. Let's zoom in on earnings action on the Lal Street. Then Marico and Voltas are set to report their results today. While Marico could see some pressure coming in on margins due to higher input costs, you do have Voltas that could, on the flip side, see a sharp margin expansion also due to the base effect kicking in. Then Snehi is standing by with what really the street is penciling in. Snehi, over to you.
We're expecting a good set of numbers coming in from Marico this time around. On a consolidated year-on-year basis, revenue is expected to grow up by 8.4%, coming in at 2,684 crores. EBITDA is also expected to see a 6.6% growth, coming in at 530 crores compared to 497 this time last year. Net profit is expected to grow by 8%, coming in at 389 crores compared to 360 crores. However, margins could see a slight bit of a pressure, like you mentioned, at 19.6% compared to 20.1%, which is a downtick of 44 bips on a year-on-year basis. We're expecting the domestic volume growth to be roughly 5%. Parachute is expected to report mid-single digit volume. Saffola is expected to also report 4% volume as well as value growth. Low teen constant currency growth in the international business is what we're expecting, and margins are also likely to be slightly under pressure due to partial absorption of higher input costs. So this is what we're penciling in for Marico. But if you take a look at Voltas, a very strong quarter is what we're expecting for Voltas for quarter 2. Revenue is expected to come in at 2,664 crore rupees, which is up 16.2%. EBITDA is expected to jump by 2.3% year on year. Net profit is expected to come in at 133 crores compared to 36.7 crores, which is a 3.x times jump on a year-on-year basis. And EBITDA margins also are expected to expand very smartly at 6.6% compared to 3.1%, a very smart uptick of 353 bips coming in on a year-on-year basis. What we're expecting largely from Voltas, the unitary cooling products revenue is expected to grow by 12%. 12% growth is also penciled in for engineering products and services, and 15% growth is expected for EMP, which is the electromechanical projects. Margins are expected to improve because the company had incurred losses in the projects in the base quarter, which means if the base quarter is 3.1%, the 6.6% jump revenue EBITDA figure this time is going to seem massive on the back of a lower base. And healthy order book gaining market share are expected to aid top line. So largely this is what we're expecting from Marico and Voltas. Good set for Marico, but a very stellar set for Voltas is what we're expecting this time.
Good set of numbers expected from Marico. Thanks very much, Snehi. And of course, Marico, that indicates, that gives a clear signal of how rural recovery is shaping. So this one would be a key to watch out for. But then how did festive demand pan out for e-commerce giants like Amazon and Flipkart this Diwali season? Which products has the most lure for customers, and how was demand for precious jewelry items that has impacted amid lofty gold prices? My colleague Aishwarya Patil is here with a special report.
Well, the festive season of 2024 has seen some green shoots and a rising consumer base as far as e-commerce platforms are concerned. They've reported that not just tier 2, tier 3 cities, but even tier 4 cities and beyond are now ordering online and shopping online. First, let's take a look at Amazon's Great Indian Festival. As far as the data is concerned, what didn't impress me as much was fashion and beauty, as well as home decor had some interesting offers on the platform, but only saw saw single-digit uptick as far as year-on-year growth is concerned. But what really shines and what stood out was consumer electronics as well as jewelry. First, let's take a look at consumer electronics. Gaming was on the rise, so you saw an uptick of 19x as far as sales is concerned in gaming laptops. Premium gaming laptops there as well, there was a 35x rise. Now, smartphones, the top 3 sellers were iPhone 13, OnePlus and Samsung S23 Ultra that drove the growth as far as smartphones is concerned, and 75% of all premium products, they came from tier 2 and smaller cities. So the demand came in from there is what they're saying. Now jewelry, largely you shop for gold, and India loves to shop for gold from brick and mortar and see the gold. But what Amazon says is that they've seen a 5x surge in precious jewelry sales, something that's really interesting. Gold jewelry saw an 84% year-on-year spike, and there was huge demand for 14 karat gold as well as 18 karat gold as far as Amazon is concerned. Moving on, let's talk about festive season sale at Flipkart. Their Big Billion Day recorded 33 crore user visits on the launch day. And largely what they've also mentioned, and which is interesting, is that UPI transactions grew by 16% on a year-on-year basis. Both Flipkart as well as Amazon reported this. Now, the other part about Flipkart Minutes is that most of their orders for electronics was serviced through Flipkart Minutes. In Mumbai, 25% of all electronic sales were in hyper-local PIN codes through Flipkart Minutes, and in Delhi, 40% PIN codes currently serviced by Flipkart Minutes is what they have reported. Now, Meesho's festive season sale has also given out some interesting data. Customer engagement on the blockbuster sale, which happened in late September, had 145 crore visits. 40% increase in total orders came in total orders as compared to last year, and 45% of their shoppers came actually from tier 4 cities. Interesting data coming in there from Meesho. Now, sellers on the platform actually also saw some interesting data and a good amount of uptick as far as their sales are concerned. 40% sellers became Lakpatis during the sale event, and 25% of Meesho sellers doubled their revenue in 2024. So largely the trend here, of course, what I have noticed has been that the network and consumer base has grown to tier 2 cities, tier 3 cities and beyond.
All right, thanks Ashwarya for that update coming in. But with that, we're completely out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Priyanka Uppal, as well as the entire team that put this show together, thank you so much for tuning in. And here's wishing you and your family a very happy Dhanteras. Don't go anywhere, because the market takes all of the action forward.